Ladies and gentlemen, good day and welcome to H1 FY26 earnings conference call of Radiowalla Network Limited, hosted by Acmal Strategy Advisors. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star and 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Vaishnavi Vaiti from Acmal Strategic Advisors. Thank you, and over to you, ma'am.
Good evening and thank you. I am Vaishnavi Vaiti on behalf of Acmal Strategic Advisors. I welcome you all to the H1 FY26 earnings conference call of Radiowalla Network Limited. Today we are joined by Mr. Harvinderjit Singh Bhatia, Promoter, CEO, CFO and Executive Director, and Mr. Harpreet Singh, DY CEO and COO, who will share insights on the company's performance, key operational highlights, and its strategic outlook. Without any further delay, I would now like to hand over the call to Mr. Harvinderjit Singh. Over to you, sir. Thank you.
Thank you, Vaishnavi. Good afternoon, everyone. My name is Harvinderjit Singh Bhatia. It is my pleasure to welcome you all to Radiowalla Network Limited earnings call for the first half of FY26. I'd like to extend my sincere gratitude to all our investors, analysts, and stakeholders for joining us today and for your continued confidence in Radiowalla. The first half of FY26 has been a period of steady progress and resilience for the company, despite a challenging macro environment and temporary disruption in the advertising ecosystem due to GST-related changes. We have maintained consistent performance across our core verticals. During H1 FY26, Radiowalla reported a total income of rupees 10.39 crores, reflecting stability among industry headwinds. Advertising revenue grew by an impressive 20% year-on-year, highlighting the strong traction of our audio advertising and in-store engagement platforms. Our profitability also improved both year-on-year and sequentially, supported by operational discipline and cost optimization. Excluding notional ESOP cost profit, and this ESOP cost was not there in the previous year, so excluding that notional ESOP cost, profit after tax grew by over 50% year-on-year, reinforcing the underlying strength of our business model and execution capabilities. Strategically, we continue to expand our in-store audio network across new geographies, adding over nearly 2,000 new stores and 74 brands were onboarded during this period. Our digital signage and DOOH verticals gained further momentum, with over 800 screens now under content management and 15 digital hoardings operational across key states of Gujarat, UP as well. We also made notable progress in international market, expanding our presence into Africa and advancing plans to establish a subsidiary in Dubai. As we look ahead, we remain optimistic about the growth potential across our audio, digital signage, and advertising business. The increasing adoption of AI-driven content curation and programmatic advertising positions Radiowalla to capture new opportunities in brand engagement, both in India and overseas. Before we move into detailed financial and operational review and questions, I'd like to take a moment to thank our clients, partners, employees. Their continued trust, creativity, and commitment enable us to keep innovating and delivering exceptional value to all our stakeholders. With this, I'll now open the floor for questions and look forward to addressing any queries you may have. Thank you. We've already uploaded the presentation on the exchange with our financial numbers. So, open to any questions. I have my colleague Harpreet Singh, who is the Deputy CEO and the Chief Operating Officer of Radiowalla, on the call with me, and we'll be happy to address any questions from people on the call. Thank you.
Thank you very much. We'll now begin with the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, you may press star and one to ask a question. Ladies and gentlemen, you may press star and one to ask a question. First question is from the line of Sanket Gupta, individual investor. Please go ahead.
Thank you for the opportunity. I have a bookkeeping question that there is a line item other current asset which is around 4 crore, and this in the cash flow it has also increased by 2.4 crore. Can you give any details on what these other current assets are? Hello?
Sure. So primarily I'll just
Sorry to interrupt you, your voice is breaking. So can you hear us?
Yes, I can hear. Yes. Am I audible?
Yes, sir. Now you're audible.
Yes, sir.
Okay. Yeah. So primarily we have GST and income tax related credits which are there, which are part of the current assets as well. And the second question you had asked for cash flow.
No, the same thing that 2.4 crore are the other current assets. It is shown in cash flows in this half yearly financial.
Cash flow, that is increase in the current assets of the cash flow. Yeah, as I said, one is on the income tax credit, what we have as well, which gets accumulated at our end. And other than that, we have some advances to our vendors, which are there. That is lying over there, which will get adjusted as well during the course of the period. So these are the two major
Okay.
line items.
And thank you. And one question regarding all these vertical in maybe 3 to 4, 5 years, say, and in long term, which vertical you see highest potential in your company?
So there are, I won't say one particular vertical because they're all interrelated. Because advertisement is dependent on our network, so we need to keep expanding our network and create opportunities for advertisement. Obviously, advertisement. If you ask me specifically, yes, advertisement will be a larger play as we add up our digital screens as well as audio, because then there are two verticals available for advertising revenue. And what we are seeing is that more and more brands are using our these two platforms for advertisement to reach the targeted shoppers. So that's very key for us going forward.
Okay. And do you think that the growth will back in H2 because the GST impact and all that, the H1 growth is not there? H2 it will recover or back to normal?
Definitely, I'll request Harpreet to add on. But we are very confident because in our business, typically H2 is much higher than a H1 revenue, being in media business, because it's all festive season starting from October, November. We see that more and more brands are spending. September, because GST regulations were changing, everyone put their spends on hold. So September, typically Diwali, we would have expected much more revenue, but because of that, lots of brands held back their spends. I'll request Harpreet if you can, want to add on something there.
Hi, this is Harpreet. So, just to adding on to what Harry is saying, we are expecting much stronger show, especially in terms of advertising revenue in the second half, which is normally also the case. The second half is generally higher than the first half in terms of ad spend, as the festive season typically falls in the second half, and there are a lot of ad spends which happen during the second half. So we are already seeing traction in terms of the second half, and it's back to normal to what we expected the second half to be. So to answer your question in simple terms, yes, second half is looking much better than the first half.
Okay, sir. And sir, I was looking at an interview in YouTube channel. You mentioned about the restaurant potential, and you are working on that direction. Is there any progress on that, and what is going on in this field, the restaurant in audio?
So, okay, Harry, you want to answer that, or should I take it?
No, go ahead.
Okay. So there are multiple things which we are doing to target restaurant category. We already are the largest service provider when it comes to restaurants, especially in case of audio solutions. We service some of the large leading names in the restaurant category. However, the idea is to look at restaurants beyond the larger chains. So we are working closely with FHRAI and have been partnering with them to reach out to larger number of restaurants. That is one. Two, we're working on a platform to automate the music curation for restaurants. That is likely to be launched in the second half itself. So that should help us reach out to smaller chains in a more efficient manner. So that is something which we will specifically target for restaurants, not only for restaurants but for smaller chains, as compared to the larger chains which require personalized attention.
Oh, actually, we are working on that kind of platforms to cater small players.
Yes, that's right.
Okay. Yes, that is important too. Okay.
Exactly.
Thank you so much. Thank you so much.
Right. Thank you.
Thank you. Participants, you may press star and 1 to ask a question. Next question is from line of Parth Doshi, individual investor. Please go ahead.
Hello. I'm audible?
Yes, please.
Yes.
Thank you for this opportunity. My question is all about your revenue segment. So which segment is drive more profit in FY26?
So as I mentioned in the answer before, as of now, the subscription revenue, which is coming from our in-store radio services, that's the largest revenue stream for us today. And as we increase the scale, there would be much larger proportion of advertisement revenue potential arising out of our network. So we see in the years to come, advertising revenue will grow faster than the other revenue streams. Corporate radio is another very interesting segment where we are, using audio as a medium for training and learning for corporates. So that also is a very exciting revenue stream and a sector where we are pitching to large companies as well. But that cycle is a bit slightly longer than a retail cycle because it is primarily a corporate kind of decision. So it has much longer time to take a decision. But that's again a very interesting and with better margin business, as I can say.
Oh, okay. Understood, sir. I have another question. Like you just mentioned that your strategy. So do you have any plan, like a strategic plan to improve your margins in the upcoming 3 to 4 years?
So margins will definitely improve because even today, if you see our cost segment, our major cost is primarily employee cost because that's where the business is all being driven by. We have specialist music team, technology team, back-end ops. So we are investing in further AI and tech tools to automate the processes at the back end which means that we don't have to hire more people now as the business expands. That will automatically reduce as a payroll as a percentage cost to revenue will keep going down going forward. And as the revenue increases, the margins will improve automatically. So yes, the focus for us is definitely to continue with our revenue growth year on year, as well as improve the margins.
So there are any specific numbers like in percentage you can mention, like in next 3 to 4 years you are targeting?
See, we have to be at a net margin level. We should be north of 10% in next 2 years or so. And automatically, when I talk of percentage, revenue has to grow as well. So you have to keep that in mind. Even in this year, our margins have improved, but because of the accounting entry of ESOPs, which we had to factor in, which was not there last year, so that took that created a hit on our P&L. But that's just a accounting timing issue, because as and when the ESOPs get vested, that will be reversed in the P&L and we will have income shown in that particular year. But this year, because of our, ESOP plan, we had to take a hit on the almost 17-18 lakhs ESOP hit came in this first half.
And then I have another question. Like the company is planning to establishing a subsidiary in Dubai. So
Yes.
What is the rationale behind this? Like, what is strategy for establishing in Dubai only?
So I'll take the opening statement and then Harpreet can add on to it from a business perspective. So we have been doing business with some clients in Middle East for some time. But what we have noticed is that, this being a local company over there has many advantages as compared to working with the overseas companies. As you can imagine, even in India, our clients would want a rupee billing and not want a dollar billing because it increases the paperwork and coordination at their end as well. So because of that, we have requests from our clients about having a local company, and it also gives an opportunity to expand further when you have a local player.
Okay.
So Harpreet, you can add on.
Yeah. Also, what we believe is that we've reached a critical stage in Dubai where having a local company can actually help us, one, target more clients, and two, upsell additional services to the existing set of clients that we already service. And that can happen only once you have a local presence, you have, somebody visiting and meeting these clients and interacting with them on a regular basis. Also, what we have noticed is that, Middle East or Dubai region is kind of the gateway for a lot of companies which have operations in Africa. So north of Africa, especially Egypt, etc. There are companies which are headquartered in Dubai which have presence in Africa region as well. And we've seen some success in Africa in terms of getting more clients there. So it will be good to set up a base in Dubai to expand in that region. That's why particularly Dubai is what we're looking at.
Okay, understood. So when we can see this launch?
Sorry?
So when we can see this launch, like a timeline you are foresee for this launch, the subsidiary in Dubai?
So currently the paperwork is in progress. Should happen shortly.
Shortly. So there is no specific time you can mention, like around 1 year it will take?
No, it will be opened up before December end.
Before December.
Yeah, we have already informed the exchange. That we are opening up the subsidiary. So, as I said, the paperwork is on. So, we should be setting it up within the next 45 days or so.
Okay. Thank you so much, sir. I just wait in the queue.
Thank you.
Thank you. Participants, you may press star and one to ask the question. Ladies and gentlemen, you may press star and one to ask the question. Next question is from the line of Jatin Shah, individual investor. Please go ahead. Jatin, may I request you to unmute your line and proceed with your question? Jatin Shah, if you can hear us, can I request you to unmute your line and proceed with your question? Due to no response, participants, you may press star and one to ask a question. Ladies and gentlemen, you may press star and one to ask a question. Next question is from Jatin Shah, individual investor. Please go ahead. So your line is on talk. Please go ahead.
Yeah, I wanted to know, could you please elaborate on monetization strategy in-store radio for the in-store radio and how it scales with the stores additions?
Sure. So, as you know, our business primarily concerns from or originates primarily from in-store radio services, which means as we add on more clients, they pay us per month per store as subscription fee. So that's for the audio services. And now with the same clients, we are upselling other services like digital screens, where again, they pay us for the content management on a monthly subscription basis. So these are the two subscription-based revenue streams what we get from our clients. And on top of that, depending on the advertisement opportunities in those stores, and if the clients are okay to have third-party advertising running in the stores, we generate ad revenue as well from the stores. So these are the two kinds of majority revenue streams what we get from in-store radio.
Understood. Thank you.
And our focus is to keep increasing this network so that the subscription revenue, which is kind of annuity revenue, which keeps coming in, and on top of that, we upsell the other services, wherein our cost of acquisition is very nominal, and we are able to improve our margins to that extent.
All right. Understood.
Thank
Hello.
you.
Yeah, thanks.
Yes, sir, go ahead. Thank you. Ladies and gentlemen, you may press star and one to ask a question. Next question is from the line of Mayuri Shah, an individual investor. Please go ahead.
Hello.
Yes, please.
Yeah, thanks for the opportunity, sir. So I have three questions. So, what is the expected contribution of international markets to overall revenue in 27?
Our primary revenue will be from India for next 12 to 24 months. As we expand our international operations, I expect it to be maybe in the range of 15 to 20% in the next 12 to 18 months kind of thing. And, gradually after that, as we, our subsidiary is set up, we have people over there on the ground. It will take us a year or so to, expand it over there.
Okay. So, is there any CapEx plan for 26, 27 to support your expansion?
Yes. Our majority of the CapEx would come into a forms of digital screens, which we need to install in these retail stores, and on the technology tools which we are building up. And since, there is no point having all the tech tools built in-house, we would be using some other service providers for those AI tools as well. Our primary expansion on CapEx front would be on digital screens and some our CRM tools what we need to build up in-house.
Great. And any plan? What are the company's plan to reach its goal of managing 5,000 plus digital signage screens?
Well, we are on track to get to that number by 27, definitely.
Okay. So by 27, you will be doing 5,000 plus signages.
Screens.
Yeah,
Yes.
yeah, fine. Yeah.
No, digital, some people talk about signage means outdoor hoardings and all. Not those. I'm talking from a screen.
Digital signage screens.
Yeah.
So, how do you differentiate your digital signage services from your other competitors?
Prateek, you want to take that?
Yeah. So in terms of digital signage services, while there are multiple companies providing these services, the market is very large. In terms of comparing with other people, what we're trying to build is a robust network of tools which can monitor the screen health and remotely manage the screen content. At the same time, a very proactive system to kind of identify if there are any issues at the client side or at the screen side and to proactively address it. See, one of the biggest challenges which happen when you operate or manage a large set of screens, and this goes for all the brands who do that, is how do you ensure that the right content is playing on the right screen? For example, you cannot be playing a wrong promo in a store. For example, offer which is already ended. If you're currently playing that offer in the screen, it can lead to disputes with the customers. So these are very, very sensitive, price sensitive, issues which can lead to disruption at the client side. So we are building up systems which are very prompt and proactive in identifying and addressing anything like that. Yeah. That's perhaps what differentiates us, and this is why a lot of our customers are trusting our services and taking us to other locations or other clients as well.
Okay. So do you tell me some biggest risk that your business has?
Say that again. Can you repeat the question again, please?
So any biggest risk that you foresee in your business?
Biggest risk. Okay.
Yeah.
So like any other business, the biggest risks are in terms of, somebody else undercutting in terms of pricing. However, what we are trying to do is to establish service standards which are superior and which can compete on the price terms.
Okay.
See, also we mitigate it when we are combining audio services and digital services together for the client. There is no other company which is in India which is providing these set of services. They are either doing digital screens or they're doing audio. But when you go to a client and give a comprehensive service and then add on an advertisement potential, revenue potential for the retailers as well, because whatever ad revenue we generate, real estate is theirs. So we share that revenue with them. So automatically it becomes our interests are aligned with them. And that's what is bringing the stickiness to our business. Even if you see the, aging of our clients, all our large clients have been with us for over a decade now. So it doesn't mean that there are no other players have not approached them or anything. But I think the clients see their advantage that a consistent service which has direct bearing on their business, because music is very a must-have for a retail client and not just a good-to-have. They don't want to jeopardize that experience in the market. And we have been investing in technology to bring in new tools so that whichever infrastructure play they have at their stores, we are able to integrate into their systems. And believe you me, this integration of IT systems with a retailer across their hundreds of retail stores is not an easy task for a newcomer to get started with. So we have to keep innovating to be ahead of the market.
All right, sir. Thank you so much for answering my questions. I'll get back into queue if I have any more questions. Thank you.
Thank you.
Thank you. Participants, you may press star and 1 to ask a question. Ladies and gentlemen, you may press star and 1 to ask a question. Next follow-up question is from line of Jatan Shah, individual investor. Please go ahead.
Yeah, hi. I wanted to know, you recently entered Botswana, Namibia, and Zambia. How is this traction shaping up in this African continent right now?
Happy if you can address the first part. Uganda, I will talk about.
Yes. So we've entered these three countries recently, and we have now started catering to some of the largest chains, or one of the largest chains there. We are in talks with some of the other retail chains as well. So far, the response has been pretty good in all these three countries. So good part is once you sign up with a chain in one country, normally if they expand to another country, your services automatically get extended. So we are seeing that benefit. We initially signed up for Botswana and then expanded to Namibia and Zambia. Now we're adding 2 more retail chains there shortly. So I would say the response has been pretty good so far.
All right. I have one more question.
And sorry, just to add on, we have just, as informed to exchange, we have entered Uganda as well. Now, Uganda is a very interesting place. Over there, with our partners, local partners over there, we have launched Radiowalla channel on a digital platform. Again, this is with Bollywood music for consumers who are listening on, and this is on the Afro Mobile network, which is one of the largest mobile network over there. So Radiowalla Uganda is on that channel. So this is kind of again a zero cost entry for us to that extent, because the partners have the music license. It is the Afro Mobile for their network. So we don't have to bear any license cost there. And it is giving us an opportunity to be present online in these markets as well. And we would be the only player which will have both offline in retail presence and a digital presence as well. So that's early stage over there for us over there, but we are pretty excited for this African market because it's a consumption market, consumption-driven market. A lot of Gujaratis, Punjabis, Sindhis over there, a lot of Indian diaspora, I would say even Asian diaspora, and we are catering to that kind of content as well. So it's not a one-off kind of entry. It's a thought-through strategy of entering into these new markets, both via offline retail store as well as digital platforms.
Right. Well, also I believe you are now proceeding with this AI-generated music library. So how does this exactly work, and how this is going to, enhance the client experience?
So this is again, Harpreet, why don't you address this, please?
Let me address it. Okay. Now, there are instances where clients require customized sounds for their brands. They require, certain types of music for their brands, which is not available in the normal library. That is one scenario. And another scenario is that if you have a genre of music where the library required is not large enough to utilize that in a store. So we use AI tools to create music which is kind of customized or which is within specific genres. It is used to enhance our existing library of music, right? So what it does is it offers us a lot of flexibility in terms of catering to client requirements or catering to clients who have very specialized requirements. And at the same time, it gives clients the flexibility to choose from a much larger variety of music, which will play in their locations, right? So it's like a win-win for both customers as well as for us. It gives them a much larger opportunity, a much larger library to work with. So we are enhancing the library of AI-generated music. And as I had mentioned earlier on previous calls, this library will continue to increase going forward.
All right. Understood. Thank you for answering.
Thank you.
Thank you. Participants, you may press star and 1 to ask a question. Ladies and gentlemen, you may press star and 1 to ask a question. Participants, you have been connected to. As there are no further questions, I'll now hand the conference over to Ms. Vaishnavi Vaiti for closing comments.
I would like to thank the management for providing valuable insights and guidance, and thank you to all the participants for joining the H1 FY26 earnings conference call of Radiowalla Network Limited. We truly appreciate your time and continued interest in the company. For any further queries or clarifications, please feel free to reach out to us at info@acmeladvisors.com. On behalf of Radiowalla Network Limited and Acme Strategic Advisors, we wish you all a pleasant evening. Thank you once again. Stay safe and take care.
Thank you very much.
Thank you, everyone.
Thank you, everyone. Thank you. Bye-bye.
Thank you very much. On behalf of Acme Strategic Advisors and Radiowalla Network Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.